Welcome to your Tuesday, August 18, 2020 edition of the WebTV Market Review, where we bring you developments in the financial and capital market as it relates to the economy. Today, in the global markets, we are looking at developments in impact investing, which has become one veritable tool for financing sustainable development across the globe. And today, we'll be looking at the prospects for deepening impact investing in Africa and Nigeria. Leading that conversation today is Mr. Andrew Carey. He's the Senior Counsel and Co-Head, Impact Finance and Investing, Hogan Lovells. Nice to have you on the program, Mr. Andrew.
Nice to be here, Mr.
Yeah, the correction is Hogan Lovells, I meant to say. And so how has it been? Let's start with the whole pandemic, the new normal, and adjusting to this period. How have you adjusted in terms of work and your activities?
Well, I think probably the same as everyone who see me in a room in my home in South London, where I've been camped now for several months. It is the new normal. I'm definitely a convert to the working from home. I found it really has worked amazingly. I'm missing my colleagues, but we catch up on Zoom. I haven't printed a document really in 4 or 5 months, which is amazing. For a lawyer, we like our documents, we like our paper. So I'm enjoying it, but looking forward to getting back to a little bit nearer to the normal, seeing people, the water cooler moments, the quick little conversations that are hard to reproduce when you're working remotely.
Let's take us through the rudiments of impact investing and why it's important in terms of the investment space globally.
Sure. Well, first, what is impact investing? Well, there are lots of definitions that are out there. The Global Impact Investing Network defines it as investing with a view to achieving an impact on social, environmental, and governance issues, but critically with a view to financial return. And I think that's very important to remember. This is not a space for philanthropy or charity or even investments that are non-returning in some way. Mostly when you speak to people about impact investing, it is about achieving the two things parallel to each other. And I always go one step further and say, actually, if you are a smart investor, if you are a good investor, you need to have regard to the impact that the enterprises, businesses, projects that you're investing in have on the communities in which they operate. And that without that, you're not a good investor. You're not having regard to risk. And investment is all about risk and reward. And so I go one step. Not everyone would go quite that far. I do. I think impact investing is just good investing.
Good investing, yes. Making impact and getting good returns in that space. But let's look at COVID-19. It's really had impact on the global equities and other the entire ecosystem in the global financial and capital market, including impact investing. This is a market that in 2019 soared above $500 billion in terms of market size. And in terms of the report of McKinsey in 2017, it said that in terms of global assets under management, $88 trillion, impact investing has a quarter of it. So how has COVID-19 pandemic affected impact investing across the globe, especially in emerging and frontier markets?
Well, two things to say. One is COVID-19, I think, impacts everything. And it's one of those sort of black swan events, those strange events that very few people, if you look back at 2019 and try to find risk reports, and I've looked at several, try to find one that says anything about a pandemic or the possibility of something like this. No one other than perhaps in the industry of World Health Organization, people like that, were predicting it. It affects everything. The other thing to say is it's complicated, and I think anyone that is speaking confidently about what the world will look like in the COVID-19 time is looking into a crystal ball that is not as clear as it could be. And there are conflicting messages. I mean, the obvious point to say is that it is impacting all economies globally, and that is unfortunately likely to impact poorer economies more fully than the more developed ones. And that's also true of within countries. The UK, we're seeing the same thing, that it's not a level playing field, unfortunately. And so that's true. But then you see other things. The markets are very interesting. There's an example is at the moment the market for sovereign debt issued by African countries is doing very, very well. And there's a lot of money out there that's built up over a decade of quantitative easing that is looking for a home and looking for yield, and is not is putting its money in some cases into the African economy. But there's other statistics, and again, I mentioned the Global Impact Investing Network. They produced
the GIN
in June. Yeah, they a report back in June where they reported that there was a fall off in investment in impact investing in emerging markets, whilst the impact investing more generally was probably more steady. It's a complex, mixed picture. And it's easy to focus, I think, on the pessimistic. It's easy to focus on the fact that, for example, many countries around the world are going to struggle to pay the debts that they are going to need to build up or have built up to deal with COVID. And the UK is one of them. Development budgets are stretched. So I've been on a number of conferences where people have voiced the idea that impact investing was a luxury that we now can't afford. So that's the pessimistic background, if you will. I don't agree with that as being the final story. My own view is actually that investors are learning from the COVID experience that you have to have regard to the potential for systemic global events. The obvious parallel with COVID-19, further down maybe, is climate change. And that if you're not going to invest in a way that is alert to these things, then you're not a good investor. And I think it will emerge, and it is emerging. I think it will emerge more that companies and projects that have built themselves in a sustainable way, had regard to diversity, had regard to the communities they work in, had regard to their people and their people's welfare and health. Those sorts of companies are going to, I think, prove to have been more robust through the COVID-19 pandemic. And it will tell savvy investors that they need to have regard to some long-termism in the businesses they invest in. I have that optimism. We've seen also, more directly, a number of bonds specifically issued, a number of bonds of the World Bank and indeed African Development Bank issuing bonds specifically to focus on COVID recovery and attracting huge amounts of interest from investors. So I started with the pessimistic, but I actually come out, I think this could be a turning point for impact investing in a good way.
A turning point, to say, a turning point for impact investing.
And that turning point is what we even want to scale down to Nigeria, because as you said, it's impacted nations across the globe. And so how can this impact investing bring that turning point in innovative ways to help Nigeria's economic recovery? Because, of course, global economies are being affected. UK, where you are, is in a recession now. So how can we channel impact investing into sustainable economic recovery? We have an economic sustainability plan that's on ground already. But how can it be integrated into addressing issues like poverty and unemployment? Because I believe impact investing can also help in that area.
I think there's a number of things. I mean, Nigeria is already doing a number of things that make it an important player in impact financing. The work that the stock exchange has done around green bonds, working with other exchanges, is
like Luxembourg.
The is active with that plan and that program for green bonds. And I do regard green bonds by the way, as under the umbrella of impact investing, albeit that they're a somewhat blunt instrument, but nonetheless, they are the volume product out there, green bonds, green loans. And Nigeria is already active, alert, and aware of that. But look, I mean, in many ways, impact investing is no different from any other kind of investing. So if you want to know what the barriers to more investment in Nigeria are, they are the usual ones. It's the lack of, or the difficulty in finding scalable, investable projects that is one of the big barriers. And I would put transparency at the heart of this. I think that all investors, of course, want transparency, but in the impact space, transparency not only with respect to all the usual things around governance and financials, but transparency right through to particular impact that is of interest to investors is critically important. Look, I think Nigeria is doing many of the right things, and it needs to look at that.
So you mentioned transparency, but that aspect of the lack of scalable projects,
huge, sustainable, scalable projects that can be of impact to the country is part of the challenges, and that you need to see more of that can be attracting impact financing. But let's talk about the enablers for increasing this impact financing and investments in Nigeria. What role can regulators play? Particularly, you talked about transparency. What other areas can regulators bring in their experience and their mandates to ensure that we can attract more investments? Mr. Andrew, can you hear me? Well, we had Mr. Andrew, but a slight technology challenge there. We hope to have him back. But he's been discussing around impact investing, the fact that it is really a very veritable tool for financing and providing sustainable financing to economies. And he talked about the fact that there is a lot of optimism on his part that it can really do a lot for economies like Nigeria and emerging markets. Though at the moment, there is need for Nigeria to adopt scalable and real-time projects that can be of huge impact to the economy in terms of sustainability. And so you talk about the fact that, yes, already Nigerian Stock Exchange has opened up the space for sustainable financing, has a partnership with the Luxembourg Stock Exchange. We're seeing green bonds being issued in the country. We're seeing various bonds that add up to driving sustainability in the country being at the forefront. So impact financing, impact investing is very critical. It has opportunities for unlocking the economy and addressing socio-economic challenges. And these are the things that we need to explore more as a country. Like I said earlier while engaging Mr. Andrew Carey, last year, 2019, we saw that the global impact investing market soared in terms of size above $500 billion. That is the global market size of impact investing, showing you how vital this market is, how important this market is, not just by word, but in terms of its role in deepening market activities. And so if we have more of transparency, like he said, which is very critical, transparency has to be at the front burner of the Nigerian capital market ecosystem and policy space, whereby investors come in and they can see transparency and governance, or add governance to in all the sectors that they want to invest in. I believe that we can attract more impact financing into the economy. And it's so huge because the issues of poverty and unemployment, which is high in the country, will require us to attract this kind of investments into projects that can unlock opportunities in the economy. We are facing environmental challenges. We are facing unprecedented times of economic activities. And so we need to drive that level of attraction, become a sweet spot for attracting impact investing, particularly in Africa. We have to be among the top two, if we're not the first, but at least top two in terms of being that zone that attracts impact financing across the globe. And so this has been a very interesting conversation so far, and hopefully would have Mr. Andrew Carey join us back in terms of the conversation around the impact investing space. I mean, this is really, really a lesson also to the globe that despite the pandemic, we have a lot of opportunities to explore sustainable financing. Just to let viewers know that even exchanges like the FMD Security Exchange has gone ahead and last year established the Financial Center for Sustainability. The FC4S is in line with the United Nations Environment Programme activities to deepen investments and activities that drive sustainability. So you want to achieve a sustainable environment, you want to achieve sustainable development, you want to drive the United Nations Sustainable Development Goals, you also need that platform, that enabler, that capacity building process, the structure and the vehicles that drive financing in that regard. And that was an event that we were there, and the governor of Lagos State, Mr. Babajide Sanwo-Olu, was also there to participate and also flag off. And that center has been carrying out various engagements across the market. And so a big one to the FMDQ Securities Exchange and the Nigerian Stock Exchange, who are both working tirelessly to deepen the market's activities in sustainable financing, in impact investing, in the climate financing, because we need that. We need a safe planet, we need a safe environment to attract investments, to have business operations, to have a vibrant capital market. And so those are things that we need more happening in the market. Just to let you know that Nigeria is not new to green bond. We were the first country in Africa to issue a sovereign green bond. That was when we had Mrs. Amina Mohammed, the former Minister of Environment, who currently is the Deputy Secretary General of the United Nations organization. She works under Mr. Antonio Guterres, who is the current United Nations Secretary General. So the issuance of that FGN sovereign green bond was to look at projects, again, that can really finance sustainable development. So we're talking about renewable energy, we're talking about sanitation, which is very important for a country like Nigeria. Water and sanitation, those projects that ensure that we have a clean environment and a sustainable one. So those are the activities that we've been seeing happening in the market. So one area which Mr. Andrew Carey raised before we did we lost that connection, is scalable and really, really strategic projects. And this again is an opportunity for strategists, those in the market's ecosystem, to explore how they can develop real-time projects that can attract these investments. It's a big call because over the years, part of the challenge of attracting investments into Nigeria has been scalable and investable projects. Projects that when people look at across the globe, they can really put in their money and say, yes, we're sure that this is going to create value. So this again calls for the public-private partnership to look at those real-time projects that can really receive this line of investment. And also, in terms of our processes, we need to improve enabling legal environments, particularly legislations that can attract more investments. And so this is a call to the government, the executive and legislature to explore how they can improve the governance environment, legislations, regulatory steps, and approaches. It's very important because when this is achieved, we can create the environment to attract more investment. Also, very, very important for us is the market. We encourage the market. We are happy with the innovations and developments we're seeing in the Nigerian Stock Exchange and even the FMDQ in terms of developing a vibrant market that also is sustainable and green. We also want to see more products coming. We want to see stakeholders explore more products that can be harnessed to deepen the ecosystem and improve financing in the Nigerian capital market and at best improve our economy. The millennials play a very key role too. We've seen a very interesting narrative around millennials showing interest in impact investing, and there is need for more awareness, education, and enlightenment to them. I mean, they need to understand more the value derived from impact investing and financing. So we need to also tap in because millennials are a huge population in Nigeria. Those between 18 to 35, they account for over half of our population, so you cannot afford to ignore them. And the United Kingdom, where Mr. Andrew Carey is based, is a country that has shown the way in how government policies can support impact investing. I believe that our Nigerian government can also learn from the UK in terms of how they've been able to develop the framework and policy steps to attract impact investing to become a key nation in the globe that drives impact investing. That is one area that Nigeria can learn from and see how it can integrate it into its economic sustainability plan and additional economic development agendas that we'll see across the nation. State governments also have to key into this to see how they can finance critical projects across the states, because this is also not just about the federal government level, but states also have to benefit from what impact financing and investing can achieve for the nation. Well, we hope to have Mr. Andrew Carey subsequently with us, but have more conversation around impact in investing, which is very, very critical now. It's becoming new normal too, apart from the COVID-19 and how it's shaping global economic activities. Impact investing is also becoming a new normal in terms of how the markets will be repositioned to finance activities in the economy. So we'll call that a wrap for today's market review. Join our conversation, send your comments and your views and thoughts around and what's an analysis. Just to let you know that in this period of global market uncertainty, we advise, particularly for our Nigerian investing, those are not credible platforms. They are out to rip you off your hard-earned savings and money. You don't deserve that. Avoid them, and if necessary, you can report them. But continue to learn from platforms like ProShare, Nigeria's leading financial information hub, where you get education and enlightenment on market activities that will empower you to make that right investment decision. Till we come your way again, let's make it happen tomorrow, 10 a.m., same time. Thank you for watching. Have a nice day, and please stay safe.